As you know, from about 2008, the bond market has really been thriving. And it was in this regard that we also saw it upon ourselves to ensure that we look at the structure of our bond market and understand the way forward with the reforms that we are undertaking. We believe, again, that it is important to have a vibrant and liquid secondary market, which we have currently through the stock exchange. But we also believe that if this market is totally vibrant and liquid, we will believe that the issue of interest rates being very high in Kenya will actually come down. In terms of the bond steering committee, what we did at the Capital Markets Authority is really to constitute a team of key stakeholders that will really drive the bond reform agenda. And what we have is really a process which is chaired by the Capital Markets Authority, but we have key stakeholders there. We have the Ministry of Finance represented, especially the Policy and Economic Affairs, the Central Bank of Kenya, again, from the perspective of policy, the Nairobi Stock Exchange, a key stakeholder for us, the Central Depository and Settlement Corporation, the Kenya Association of Stockbrokers and Investment Bank, a key stakeholder for us, as well as a commercial bank and 2 independent advocates, as well as 2 independent bond market experts. There's a secretariat of our legal team, as well as our research and policy department that is actually handling this. Under that, we have also structured the bond steering committee to have 2 particular committees. One is to really advise on technical and policy, and the other one is to advise on the legal and regulatory matters. So based on the policy that is adopted by the bond market steering committee is really now to see how can that be structured by amending our legal and regulatory framework. The first corporate and treasury bonds were issued really in 1996 and 1997, respectively. And we have seen significant growth in these particular instruments, and really the market has grown to a quantum of 800 billion, which is not a small market. In terms of our performance, you can see again what I was talking about. The performance has really, again, leapfrogged. From 2006, you've seen, in terms of our turnover, it was only 49, and it has increased 100 times to 479 by the year 2010. So actually 10 times. So that's really impressive.
The financial sector plays an important role in a country's economic development. Better developed financial systems are associated with faster economic growth and development. There is widespread experience and research that have been done worldwide have particularly shown that only countries that save more than a quarter of their national income can achieve a sustainable high economic rate of growth. Indeed, if you look at the countries in the Southeastern Asia, the more recently to graduate into that level, that status of industrialized nations, you see their savings rate has been quite high, and like perhaps as most of our countries within the continent of Africa. So to support capital formation, therefore, we must promote mobilization of domestic savings through implementation of appropriate economic policy reforms and structural reforms that address those factors that may be militating against saving. Equally important, we must intensify our financial literacy efforts in order to inculcate the culture of savings in our people. Ladies and gentlemen, Kenya's financial sector has the potential to contribute much more to the achievement of sustained, broad-based economic growth and a lasting reduction in poverty. Mobilizing adequate resources and channeling them to the investment project with high growth and employment creation impact. Capital markets can therefore play a crucial role in the realization of our development goals. Therefore, efforts to improve the bond market by implementing reforms that deepens this market and widens the range of individuals and institutions that can participate in investing in bonds is indeed most welcome. I think this is an area that is important, perhaps in the context of a challenge that we have been facing in the financial, and in particular within the banking sector, of the high interest rate spread. If we have more people participating through the bond market and small savers, but maybe through vehicles like the unit trust, we could create more competition, and that might provide a basis on which we can be able to begin to tackle that problem.